we know, the bottom line is that, number one, it's unconstitutional, but even if it were, it's economically destructive. People forget that capital is what makes us more productive. It makes every worker able to produce more. It helps all of us live more prosperous lives. When you talk about a wealth tax, it's not just, as Elizabeth Warren likes to say, going after yachts and diamonds and Rembrandts. No, the vast majority of wealth in this country is actually invested in profitable, productive business enterprises. Go after that wealth, and guess what? All of our standard of livings decline.
David, that's a point that Joel makes again and again, that it's not buried in a mattress or sitting in a vault somewhere, that it's being deployed in American companies and in America in entrepreneurship and everything else. Do you disagree with that?
I agree that revenues and assets and wealth of the super rich and everyone else is profitably invested. I totally disagree that a moderate tax on capital or on assets has bad economic effects. History suggests quite the opposite. The U.S. economy did far better decades ago when we had much higher tax rates on capital. And in fact, the lack of tax at the high end is, in my view, damaging the economy. I see all the time very complicated, economically damaging tax gaming, tax avoidance stratagems that waste resources in order to conceal them from our existing tax system. Patching our existing tax system to bring it back to levels that would meaningfully tax the super rich and combat some of these tax avoidance games, in my view, would bring the economy back to a better functioning level. Plus, there's the issue of declining government investments in all sorts of activities that have historically been shown to be economically beneficial. And again, I think, yes, the fact that assets and wealth are invested profitably is true, but that doesn't mean that a moderate tax in a way that patches holes in the existing tax system would hurt the economy. In my view, it would help the economy.
But David, there's a recent paper out that talks about basically how much wealth the wealthy have, and more importantly, where it's invested. And it looks like a greater share than we expected is in private companies. When you look at the difficulty of valuing private companies, you look at goodwill, you look at a private business, how do you actually, you're going to have tens of thousands of IRS auditors auditing probably hundreds of thousands of wealthy taxpayers to get that revenue. Does that make sense?
So let's be clear, a good portion of the reason why so much of the asset base at the high end is invested in private companies is based on current tax avoidance stratagems. And many of these investments are done in a way that are economically damaging. We see this for estate tax avoidance, where super rich pool their resources in a way that's well known to be inefficient, economically damaging in order to reduce valuations. Now, there's known ways to combat these stratagems that would be built into a wealth tax, and honestly should have been built into the estate and gift tax a long time ago. There are formulaic measures for assessing the value approximately of private held companies, along with limited use of assessment. And yes, IRS resources should be brought up considerably.
Joel,
yeah, the fact is, the professor says the economy has gone down relative to how it was 40 years ago. That's not the fact. The fact is, the median family income's at all-time highs. The middle class is shrinking. That's because people are moving from the middle class to the upper middle class and upper class. This is census data. For him to say that the economy for those that are the typical income earners is actually less, that's just factually untrue.
All right.
Productivity growth and median wage growth is dramatically lower than it was in the 1950s and 1960s.
Sir.
The debate continues, gentlemen. We appreciate it. We've got another big hour of squawk ahead. We'll be back in just a moment.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money, and times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
It's going to be mild today, but with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Can I have chemo at home?
It's only suitable for a couple of types of
cancer.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
Make sure to follow TuneIn today, so you're always in the know. Twitter, Facebook, Instagram. Just search @TuneIn. MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
Blacklisted, the U.S. hits China AI companies with penalties just days before new trade talks are set to begin.
Technical foul. China State TV axes some televised NBA games as the fallout over a pro-Hong Kong tweet escalates.
And who's up and who's down with a key segment of U.S. consumers? We've got just released data on the spending habits of the American teenager as the final hour of Squawk Box begins right now.
Live from the most powerful city in the world, New York, this is Squawk Box.
Good morning and welcome back to Squawk Box here on CNBC Live from the NASDAQ market site in Times Square. I'm Joe Kernan, along with Becky Quick and Andrew Ross Sorkin. The futures right now are indicated down about 180 points yesterday. When it was all said and done, it didn't give much back at all from what we saw on Friday. This is all China-related this morning. More angst about what can really be accomplished in the next round of talks, given that some of the news overnight about blacklisting China concerns. That says it right there. Still weighing on sentiment. As a result, you have Treasury yields, which had, now I think it's good when the yields go up for sentiment. Now they're back down at 1.52% on the 10-year.
Okay, a couple of big stories that investors are going to be talking about today. I want to tell you about the U.S. now expanding a group of blacklisted Chinese companies to include some of the country's top AI startups. Now, that move is now barring these firms from buying U.S. components and is similar to the U.S. government's action against Huawei earlier this year. And check out shares of chipmaker Umbrella. How do I pronounce that?
I think it's Ambarella.
Ambarella. That stock down about 10%, which is just one company that could be impacted by the ban. U.S. companies say the blacklisting isn't tied to this week's resumption of trade talks. Those are scheduled to get underway on Thursday. Now, China's state-run TV network is removing preseason NBA games from the schedule there. This is in addition to what Tencent said it would also do, which is to temporarily suspend its slate of streaming NBA games. The development coming now as a now deleted tweet from the Houston Rockets GM supporting Hong Kong protesters escalates tensions on two continents. NBA Commissioner Adam Silver saying this morning that the league is apologetic over the reaction to the tweet, but supports freedom of expression. So it's a fine line he's trying to walk there. He's planning to head to China tomorrow in advance of a preseason Lakers-Nets game. Of course, the Nets owned by Joe Tsai, who was the executive chairman, I believe, at Alibaba. Separately, Boeing now being sued by the union representing pilots at Southwest Airlines. The pilots claiming Boeing rushed the now grounded 737 MAX jet to market and misrepresented the aircraft as safe. Boeing said the suit is without merit. That stock down about 1.5% more, or rather less on that news, and more on a story from the Wall Street Journal this morning out saying that European regulators are unlikely to allow the certification of the MAX 737 at least this year, and that there's differences between the FAA and the Europeans. So we'll see.
By the way, that Dow component down about 1.5%. It has improved over the course of the morning. It was down by even more than that earlier this morning, but that's happened as we've seen additional weakness come across throughout the markets, with the Dow now down 170 points. That has been weakening throughout the morning since 6 a.m. for the last 2 hours. One of President Trump's favorite punching bags this year has been the Federal Reserve. Just last month, in the wake of the Fed's decision to cut interest rates a quarter point, Trump blasted his own hand-picked central bank chairman, Jay Powell, saying that he lacks guts and vision. But according to the latest results from CNBC's All-America Economic Survey, the president's aggressive tactics towards the Fed aren't too popular. Steve Leisman joins us right now with more on that. Hey, Steve.
Yeah, thanks, Becky. The All-America Survey finding that the president's not winning this battle. In fact, the public sides with the Federal Reserve on the issue of Fed independence. We asked the question, should or should not the president try to influence how interest rates are set? 50% saying that the president should not, and just 25% saying they should influence it. Now, we have a large no opinion on this, 22%, so I guess there's a big part of the population that could be swayed. But to the extent that people know about this issue, they tend to side with the Federal Reserve and on the side of independence. I will tell you, we work very hard to ask a neutral question in this regard with our Republican and Democratic pollsters. It is not easy. I will tell you, this is the smallest percentage of the population that knows about this issue of any issue we polled about. And I just gave you some examples from the Wall Street Journal, NBC, and the CNBC survey. So 99% of the public knew about the Orlando nightclub terrorist attack. 91% knew about Trayvon Martin. And then we put a couple financial issues in there. This is surprising me. Just 40% of the public has heard or seen at all about the Trump's Fed comments.
You know what surprises me more is that 77% of them said they knew about the debt ceiling debate.
Well, that was big. It almost shut down the government. Yeah. So it shows you that the public is not immune.
Are we envious of the people that don't know? Yeah.
I consider
we kind of wish we were.
You know what, Joe? It's very interesting. I consider this poll as news from outside of our bubble. This is what the broader public.
Wait,
they don't know. We're in a bubble. Yes. This is the bubble that we live in. Let's go on to the next one where we ask people, are you confident in the Fed?
Now, you asked everybody this, including the 60% who had never heard about any of this.
Yes, we asked everybody this. So you'll see that people answer pretty honestly in the sense that just 24% say they are indeed confident in the Fed. The financial industry, we asked some checks on this. By the way, we couldn't put it on the graph. 72% is confident in the Army and the armed services, okay? So that doesn't fit on this graphic here, but that one has remained very high, down a little bit. But you can see, take a look at the changes here. We're kind of interesting. We last asked this 10 years ago in the grip of the financial crisis. So it's interesting the Fed is unchanged. The financial industry's come up 10 points. That's pretty good news. Congress, an all-time low in the series, and the Supreme Court, an all-time low, down 11 points. The next screen we have to call, again, news from outside the bubble, Powell who? Okay? And what you see there is 66% of the public don't have an opinion on Jay Powell. 18% support him or approve of his job, and 18% disapprove. That's a little worse than Bernanke, perhaps. But remember, the people who didn't know about Bernanke was much smaller because Bernanke was much more in the news back in the financial crisis. And he's right on par with Yellen, who was 18. So really, it's about, I don't know, a third or 40% of the public are in tune. Now, we'll tell you this. Our pollsters are very surprised. This issue on the Fed is not resonating with the president's base. Okay? I'll give you some numbers here. On immigration, Republicans support the president 80 to 15. On the Fed issue, they support the president 42 to 34. So half as many Republicans support the president on the Fed as support him on immigration and border security. His base is not with him. His base is net negative on the Fed issue. So the pollsters are sort of like, well, I'm not quite sure what he's getting out of this. I mean, maybe he's getting lower rates. Maybe we're going to debate that right now. But it's a curious issue where Republicans are staunchly behind the president on almost every other issue, on overall approval, not on the issue of the Fed.
Okay. Let's continue this conversation. Steve, stay right here where you are for more on President Trump, but taking on the Fed. Let's bring in our guest. David Wessel is here, director of the Hutchinson Center on Fiscal and Monetary Policy at the Brookings Institution. Also, George Selgin is here. He's the director of Cato Institute's Center for Monetary and Financial Services. David, I'm going to go to you first. You just heard what Mr. Leisman had to say. Is there any argument to be made that there should be support for President Trump's approach?
I'm reminded that I think as Alan Blinder said when he first went on the Fed, Alan Greenspan told him that most Americans think the Federal Reserve is a forest. So I'm not surprised that the public doesn't know about as much about the Fed as we do in the CNBC audience. Look, I think that the president must have calculated that if we have a recession, he wants to blame it on the Fed. He stepped on his own message by starting and continuing a trade war with China, and I think that's more predominant in people's minds. They're going to understand that more.
David, before we get to George, though, what do you make, though, of the argument that presidents have done this forever, maybe just not so publicly?
Oh, well, look, I think it's totally legitimate for the president to complain about the Fed, to talk to the Fed about the economy. And as you know, they did it publicly until the Clinton administration. It's an exception to the rule. I think where the president is one thing to say, I don't like their interest rates policy, but to call the Fed chair a bonehead and to review his press conference before he even does it, I think it's disrespectful. It undermines confidence in our government and all our institutions. I don't think it serves his interest, and I think it's just wrong.
George, I know you're a supporter of the president. Do you agree with David Wessel?
Well, I'm not a supporter of the president, first of all. So I can't represent his view here. I actually agree with David. It's not helpful for the president to be attacking the Fed the way President Trump has been doing, and I think it interferes with the Fed's ability to make policy in a way that is simply based on its evaluation of the circumstances. The Fed now has to worry about whether it looks like it's caving in to presidential pressure. That complicates its job in a way that
George,
can do harm.
I mean, let's cut to the chase of what I think is the issue that matters most to our viewers, which is, do you think the Fed is caving into pressure? What impact does it have that the President of the United States, and I've lost count in September, but I think we counted like 22 of 30 days in August, or 31 days in August, however many days are in August, the president tweeted about the Federal Reserve. What impact, and George and then David, does it have on Jay Powell and the Federal Reserve?
I don't think it's having any impact. It might, if it has any impact at all, be causing the Fed to dig in its heels and perhaps to resist cutting rates more than it might otherwise. But as far as I can tell, the actions the Fed has been taking while all this tweeting has been going on are justifiable in terms of economic circumstances. So you can't tell from the actual decisions the Fed's been making that it's caving in to pressure. It does need to cut rates. It has cut rates, but that doesn't mean it's doing it because the president is telling it to.
David, how much of this do you think actually this conversation we're having actually think happens in the room with Jay Powell?
I think they try very hard not to have this conversation. It's impossible to avoid. Jay Powell has to get up every morning and say, is this going to be the day that I read on Twitter that President Trump is trying to fire me? But there's also this interesting phenomenon. There was an NBER paper the other day which suggested that the tweets move the bond market and the bond market moves the Fed. Right. So it might be having an indirect effect.
I think it has more of an effect than people let on. I think it makes every decision, it makes the entire decision-making process right now existential for the Federal Reserve. If they get this wrong, I think there's an argument that there's political backlash against the Federal Reserve in a way there would not be if the president had not put it in the face of the public.
But then you say, but look, David, come back on this, because your view, I think, is that the public doesn't really even look at the Fed in the same way that we do.
I think the most important set of people to watch are the members of Congress. It is extraordinary. Republicans in Congress, most of whom, at least until this recent issue on the Syrian border with Turkey, have stood behind the president, are absolutely not with him. When you look at what the members of Congress on both sides of the aisle say when Jay Powell testifies, you think he was the Pope or something. So there is very little support for the president's attacks on the Fed from Congress, and ultimately that is the Fed's biggest insurance policy against playing with its independence.
Okay. Dave and George, want to say thank you and appreciate your time and being with us.
You're welcome.
You bet.
You're welcome.
Steve, thank you, sir.
Pleasure.
All right, coming up, when teens go shopping, where are they spending their money? We've got some data just out this morning that tries to answer the questions, who's on the upswing and who's falling out of favor. Details with big implications for some of the top brands. That's next. You're watching Squawk Box on CNBC.
How well does your financial advisor know you?
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Fortunately, there's only a 1 in 11 million chance of being bitten by a shark.
Ow!
Oh, unlucky. Never mind, at Curry's PC World, there's a 1 in 10 chance to get half your money back on all 2019 LG OLED TVs, like the LG C9, described by Which as simply the best. Its OLED technology brings nature alive with astonishingly accurate colour and clarity, and there's up to £500 off. So the question is, are you feeling lucky at Curry's PC World? T's and C's apply. GB16 plus. See currys.co.uk.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
The MLB is in full swing.
Looking up, and this one is up and out. A home run.
Swung on and into the air to deep left. That ball is high. That is far. That is gone.
To listen, just search MLB Today on TuneIn Premium so you don't miss a moment of the games on TuneIn. TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live. Regular season matchups and rivalry games. Conference championships and bowl games. The college football playoff.
The throw, he steps up, he's going deep down the right side. Andrews.
You can listen to it all for free.
The end zone, touchdown.
At home, on campus, or on the road, hear the excitement and pageantry of college football all season long free on TuneIn. NFL fans, hear every live game on TuneIn Premium. This Thursday, hear the home and away call as the second place NFC East New York Giants visit the first place AFC East New England Patriots at 8:20 p.m. Eastern.
It is long enough, and it is good!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to Squawk Box, everyone. We've been watching the futures this morning, and we are still looking at some pretty extreme pressure on the futures. Dow futures down by about 200 points. This has worsened over the course of the last 2+ hours. S&P futures down by about 22. The NASDAQ off by 56, and most of the pressure coming as we can continue to get headlines that indicate the trade talks with China and the United States could be more complicated, and as we hear things about Brexit and what might happen next there.
Okay, the Toys R Us brand is on the road to return with a major partner this time. Target has announced it is now partnering with the company that owns the Toys R Us brand, True Kids, to help it relaunch ToysRUs.com. Shoppers at the website will be redirected to Target.com to complete that purchase, and the move gives Toys R Us a restored online presence as it seeks to open new brick-and-mortar Toys R Us stores. The company wouldn't say how revenues from sales will be divvied up.
Right, we've got some new data out this morning on the pulse of the U.S. consumer. It looks at a segment of the population that doesn't grab as many headlines as other groups, but has big implications for nationwide spending. Courtney Reagan joins us now with more. Who's this?
This is the teen survey. So we get to know what all those teens are interested in.
Can you imagine trying to buy inventory for a store?
It would be really hard. It would be really hard, which is probably why the teen retailers often struggle. The consumer, we know, though, in general, has at least been the standout for the U.S. economy. But we know the economy itself is showing signs of slowing. Teens also are spending less. Nearly a third of the 9,500 teens in the 38th biannual Piper Jaffray survey says the economy is getting worse. It's up from a quarter a year ago. Further, teens are spending 4% less than they were last fall. They're spending 10% less than they were in the spring, and that's hitting the lowest level since the fall of 2011 in this survey. Now, when they are spending, males still spend the most on food. Females are spending the most on clothing, though apparel spending overall is down 3% from last year for the group. Nike remains the top brand for 9 years running, coming in slightly stronger than last year as the preference for athletic brands continues with teens. American Eagle Outfitters is the second favorite apparel brand for at least the fourth straight survey. Adidas holds its teen market share, coming in as the third favorite apparel brand. Lululemon moves up to the 7th spot from 11th in last fall's survey. That actually is the highest spot that Lululemon has seen yet in this survey. Now, teens are shopping increasingly online, but for beauty, 91% of them prefer to shop in store. However, cosmetic spending is hitting a 19 survey low, with spending down 20% from last year. Ulta does further its lead as the top beauty destination when they're buying beauty, gaining 5 percentage points from the spring as second place Sephora falls by 9 percentage points. For more of the survey, you're going to want to check out CNBC.com because it has 67 pages of data of all sorts of things that teens like: footwear, video consumption, and more.
You know, Court, we were just talking off camera about this, but the first thing that caught my attention is, okay, teens say that Forever 21 is their 6th favorite brand, but it just filed for bankruptcy.
It did just file for bankruptcy. It was their 4th favorite brand, so it has fallen in the list. But
it's still
look,
number 6, and it doesn't mean that you're going to
6.
survive or your stock's going to do well.
That's true, yeah. It's still number 6, and they still make billions of dollars, but it still doesn't mean that you're going to stick around forever. And Forever 21, I mean, I think some of the styles, too, teens are growing out of that. They're aging out of it. They're moving on.
I guess it speaks to the nature of how fleeting and how fickle these shoppers in particular are.
Absolutely, absolutely. I think, many of my cohorts look at each other like, oh, we used to shop there, many years ago.
Not 21 anymore, right.
Not 21, and you're not capturing sort of that new consumer.
Courtney, thank you.
Thanks.
For more on the restaurants angle, let's bring in Nicole Miller-Regan. She is Managing Director and Senior Research Analyst at Piper Jaffray. And Nicole, just looking at the importance of restaurant spending, I guess the statistic was 2014 was when you really saw an inflection point. Teens started spending more on food than they were on clothes, and there's been no looking back, right?
Right. What they're really spending more on is experiences over things. So to your point, 23% of mindshare goes to restaurants. This is 200 basis points higher than what is spent on clothing in terms of teen mindshare.
Who does the best when it comes to restaurants? Who comes out on top?
There's a couple standouts. We really like Chipotle as a stock. And this is a decent proxy of their, recovery efforts and the improvement they're making there. So they're solidly in the top 3 in their cuisine category. They are number 1. Starbucks, on the other hand, they are the only public company with double-digit mind share. And then if you just step back and look broadly overall, Chick-fil-A is absolutely eclipsing the number 1, 2, and 3 prior seeds, essentially, and keeping that number 1 spot.
And in terms of what you learned in this survey, did it change your mind about any of your theses on any of these stocks, or was this something that kind of backed up what you'd already thought?
It absolutely shows a couple of things, that teens like limited service, that dominates. We have other surveys, however, as they as they become young adults and look at the millennials and young adults today, that does flip to full service or casual dining. So that's one important piece to keep in mind. The other, experiences over things, and you look at where that comp is gravitating towards a Chick-fil-A or a Starbucks, or even Chipotle to some degree. They're eating in, which is an interesting trend. So sitting down and socializing, and then also beverage. There's a lot of beverage consumption that comes with those mindshare numbers and the associated comps at those companies.
Like sodas?
Actually, it's not necessarily soda. It's much broader than that. So Starbucks is a great proxy of being not just hot coffee, but cold, being not just coffee and caffeine, but non-caffeine, and not dairy, but non-dairy drinks. And so when you look at Chick-fil-A, that's something that they pressed hard on in the last 12 to 18 months, and where they gained a lot of mind share. Clearly in their main chicken category. I mean, there's also a lot of preference going on in chicken right now as a category, but they also solidly built up their beverage platform.
Does the decline of the mall change, or has it changed over the last 5 or 10 years as you've been doing this survey? I mean, I think of Chick-fil-A as being a mall-based retailer, but I guess they have a lot of freestanding stores too. Have you seen those changes with teens not going to the mall as much have an impact on what you see in terms of the survey?
Absolutely. I think that's when that preference had that inflection point back in 2014, as you mentioned. That was the trough of mall traffic, and that became the peak and the growing trend for restaurants. And this is where teens socialize. So it's really important that restaurant brands are getting them not just on the food profile, but the convenience and the gathering places and intersecting where they live. So mall being on the mall pad and in the mall in terms of food is still a positive. And then being an anchor, once we start to drill down into the full service category, those anchor places like an Olive Garden for Darden, they always show up as a number one as well.
Nicole, thank you.
Okay, coming up on Squawk, how to end the billion-dollar strike against GM. We're going to examine whether auto workers' tactics are working and what a good deal to end the walkout could look like. Plus, after the collapse of WeWork's IPO, we're going under the hood of one of the world's most valuable venture-backed private companies. It is all ahead right here on Squawk Box when we return.
I want more! The biggest cat in the world was longer than a cricket bat. Think that's big? Tonight's Euro Millions jackpot is an unmissable £169 million. 169 million! Now that's big.
Euro Millions from the National Lottery. Amazing starts here.
Estimated jackpot is capped at €190 million. Rules and procedures apply. Players must be 16 or over.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring.
Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Searching for a more memorable short break? Fly from London Heathrow to Cork from $55.99 each way as part of a return trip with Aer Lingus. Step off the plane and into a warm welcome in Cork. Surround yourself with breathtaking coastal views. Soak up the culture of Cork City or head to the colourful town of Kinsale and indulge in the best seafood around. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offer subject to conditions and availability.
Still to come, breaking inflation data. We'll get the latest read on producer prices. That's out in just a couple of minutes. We're also bringing you the number and analysis about what it means for the economy. Squawk Box will be right back.
How can I deliver superior long-term results?
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Hearing is an underrated miracle.
intimate whispers, the lushness of symphonies, the soothing patter of rain on leaves. If you had that taken away from you, it would be a massive loss for most of us. Almost all of us go every day without really stopping to think about just how important it is to us.
Audible presents The Body, a guide for occupants, written and read by Bill Bryson, including original bonus material exclusively available at Audible. Listen free as part of your 30-day trial, $7.99 a month after 30 days, renews automatically.
Can I have chemo at home?
It's only suitable for a couple of times a year.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Be honest. How much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention. Because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models ordered by 30th of September 2019 at participating retailers, subject to availability. UK residents age 18+. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Welcome back to Squawk Box on CNBC, live from the NASDAQ market site in Times Square. We're just seconds away from the latest read on producer prices. The futures are down. The Dow's down 170 points. A big part of that, or one of the big parts, is Boeing, which is down 5-6 points. Rick Santelli standing by with some of these numbers. Rick, the numbers.
Yes, September read on producer price index, down 0.3. Definitely not the up 0.1 we were looking for. You strip out food and energy, down 0.3. So these are both much wider out than expectations. Let's look at ex-food and energy on trade. That's unchanged. Final demand year over year up 1.4. Now here's an interesting one. PPI ex-food and energy year over year. We've had 25 straight months, 2% or higher. This is number 26. Barely 2% right on the nose, 2.0 on the nose. And if you look at year over year core trade, 1.7. So these numbers are definitely, from a headline perspective, much colder than we were anticipating. Even though we do have the year-over-year numbers falling in line, this is taking a couple of basis points off the Treasury yields, and we will continue, of course, to monitor when we have CPI, the cousin that might be more appropriate at this point in time to really see if the inflation pressures are cooling to the extent of this part of the pipeline. Squawk Box gang, back to you.
Rickster, thank you for that. For more reaction, we're joined by CNBC senior economics reporter Steve Leisman, who's on set with us. Also, senior markets commentator Mike Santoli is with us. Steve, what are you seeing there?
You know, I'm just looking at a sea of negative numbers. It's not like I can point to one area that caused it to decline so much. And it's not like we had a huge number in August and this is a bounce back from that. I'm just looking at energy down 2.5%, the trade component, which is a sort of middleman type of component, down 1%, transportation down 0.4%. What else here? The ex-food and energy number, I will tell you, is 1.9 year over year, and that is actually up. So, look, I think there is no pipeline pressure out there right now, and that's the story. And I don't know the extent to which the trade and the new tariffs might have influenced this, but I think the bigger economic story today, Andrew, is going to be Jay Powell talking. And I think that he has an opportunity now to reset or to confirm the expectations of the market when it comes to the Fed.
Do you think we're going to get something out of this?
This speech? Yeah. I would say, yeah. When you look at the title, it looks like he's going to be talking about data dependence and monetary policy.
We don't have enough in the markets today with the China trade talks and Brexit talks?
Well, he's been asked to give a speech, and he may decide to make this a speech that he makes it worthwhile to listen to.
40% of people know who he is.
Well, he may want to up that, Joe.
Right.
He may want to actually be more known now.
Mike Santoli, explain this. We have the futures at one point. The Dow was flirting with being off almost 200 points. It's come back marginally. What do you think's driving this?
I think it's the overseas news. It's the combination of reduced optimism about anything on China, the Brexit stuff. So I think it's an overseas news story that is getting pressure on Treasury yields again. Now, this producer price index number is moving in that same direction of actually having Treasuries rally just a little bit, and that in general has been holding stocks in check. We're still kind of knocking around this same range. I noted at the close yesterday that the day in early May when the president, China walked away from this possible deal and the president announced new tariffs, the S&P closed at 29.45. We closed yesterday at 29.38. So we've kind of been walking this path for quite a while right now on this general idea that we have some slowdown globally. We just don't know if it's a lull or something worse.
Mike, go ahead. I just want to ask you about the insanity, right? So
which part of the insanity?
I mean, Mike, tell me if I'm wrong here. There's somebody out there who's watching the headlines, and this person, when there's positive trade developments, they go buy.
Right.
And when it's negative, it's sell. And it's like Dory, right? No idea, the fish I'm talking about, Dory has no idea what he did yesterday.
Right. That's right.
They both explore.
Right. But they had no idea what happened yesterday and said, I wasn't burned yesterday, I'm fine, I'm going to go and do the same thing over and over and over again like a hamster on a wheel here and a fish.
If that machine programmed to do those things has a time horizon of seconds or minutes, it actually kind of works because the trades do send this pulse through the market. And yesterday we got two separate rallies intraday on a purportedly positive China trade headline. But once that all
to have two separate rallies, you have to have a sell-off too in the middle.
Right. Exactly. Right. That's what I mean. Two fleeting little pops. So I do think that, but all around it nets out because, as I said, we've been kind of in this range.
More as you're speaking here.
But is this crazy, or does it make sense to you? People are making money on this macro intraday trade headline trade.
I think there have always been people who take a shot at the latest headline and see if they guess right on what that, whether it's going to get traction.
I would just push back a little bit. It's not a few people. It's enough people to move the market in a meaningful way.
It's enough tactical trading systems built in that way that set the marginal price on a moment-to-moment basis.
So this is black boxes trading the logic of the China-U.S.
But also it's also, you have to think about how it goes. You see that headline, if there's an interpretation that it's a net positive for trade, you say, okay, I had sell orders in here, let me pull them back and see what happens, right? So that's not necessarily people thinking it was a huge deal, it's just the supply-demand generally shifts at that minute.
Let me just tell you, I want to just give very quickly, as we go into this speech today by Jay Powell, 75% probability of an October rate cut and a 42% probability of it happening of another one and happening in December. And I'll tell you, that number was above 50% before the jobs number, and that came back down.
Rick, did you have something you wanted to say quickly?
Yeah, on this electronic trade, first of all, we can't put the genie back in the bottle, but I'm a little shocked. Steve, Mike, who decides what's meaningful in terms of a strategic way to interact with the markets? This takes us right through the technological revolution around every aspect of our lives. There's nothing wrong with computers in trade. It's different, it's fast, but in the end, if it was inappropriate or not priced correctly, it would afford opportunities. If there's opportunities of mispricing, machine or no machine, it will get corrected.
All right, Rick, thank you. Steve, Mike, thanks, gentlemen.
Joe.
One and all. With the ongoing standoff between China and the Houston Rockets, the NBA finds itself in hot water for what seems like the first time in quite a while. That's what Jason Gay says in the Wall Street Journal. Jason joins us now on the Squawk Newsline to talk more about the developing situation. You usually don't pull punches, Jason. Jason, you saw the Trey Parker and Matt Stone, you saw the official apology from South Park to China. Like the NBA, we welcome the Chinese censors into our hearts. We too love money more than freedom and democracy. She doesn't look anything like Winnie the Pooh. Tune in to our 300th episode this Wednesday at 10. Long live the great Communist Party of China. May this autumn's sorghum harvest be bountiful. We good now, China. I mean, that was pretty. There's times when they knock it out of the park.
All the crisis management firms in the world together could not come up with a statement as elegant as that.
Right. Unfortunately, it's not far off from the NBA statement.
Well, the statement that the NBA did, they're now kind of revising. Adam Silver came out with a new statement today, sort of acknowledging that their first statement was a punt. And, you know, as you alluded to at the top, this is kind of unfamiliar territory with the NBA. They're an organization that has had pretty much a completely fantastic run of press over the last half decade or so, especially since Adam Silver's been commissioner. So for them to be on the other side of this is new ground for them. But this is, of course, habitually the circumstance in China. And for the NBA, they are quite a situation because they're there now. They're there in China playing games.
I mean, you knew that people were bound to bring up Steve Kerr or Greg Popovich, or I mean, they just hammer the government in this country, and now that seemed like a relatively innocuous tweet from the Houston guy. I mean, that had to be glaringly obvious that this is not apples and apples for how we treat, talking about, and I don't know why you coddle a communist regime versus the government here, but whatever.
Sure. I mean, look, a lot of people have asked, what's different about what the NBA is doing versus another corporation that has a similar kind of investment in China? And I think the difference here is that the NBA, obviously, the nature of it, the kind of, sell they're doing of the NBA, sort of the idea of having free speech, free expression. This is an expressionistic sport. People want to hear from athletes all the time, and the NBA has kind of had an open door policy to all of that. And so the very nature of, they haven't quite come down and condemned Maury, but certainly acknowledging the discomfort that this has caused is unusual for them. Usually they kind of let the fur fly there.
Well, we pointed out it's not like the rest of corporate America has been very outspoken on Hong Kong either, Jason. I can't think of a single place that has said we're with the freedom-seeking demonstrators either. So, I mean, it's almost everybody. Everybody knows there's 1 billion consumers over there, I guess.
An interesting question, though, and it's been raised by a number of people, is like, is the NBA perhaps in a situation where it may have a little bit of leverage here? We do always point to the size of that market there and the investment that companies want to have in China, but China loves the NBA. It's a huge entertainment product there. And were the NBA to somehow, remove itself, does that create, a potential leverage point for the NBA? I don't know.
The irony, though, Jason, in all of this is that, you have, and it's become a political issue, you have folks, frankly, on the right who have typically been in the shut up and dribble category on this in so many ways. That was also true of the argument around Kaepernick taking the knee in terms of what was happening in the NFL. And now all of a sudden are on this other side of this freedom of speech debate.
Yeah, I mean, it's been a tremendous, holiday for opportunists here to jump in and pile on and, condemn the NBA for what they are interpreting as sort of progressivism for business. The idea that all this free speech stuff is just some way of making the sale for the NBA. I mean, I can understand why that's a sort of juicy point to take. But if you're down there and you're talking to these athletes and you're familiar with the things that they care about and the causes that they're taking on, I would caution against that. I think there's a real truth to a lot of the sort of social progressivism you've seen in the league in the last, especially decade or so, with people like LeBron James, Steph Curry, and so on.
It's hard to have as much empathy for, millionaire athletes that are kneeling versus people in Hong Kong, though, that are pushing back against a communist regime.
Unquestionably. It'll be very interesting to see what happens when LeBron gets there. That's a tough one for me to get around. I guess you can make that point in some weird universe. Anyway, thanks, Jason Gay of the Wall Street Journal.
We are into the fourth week of a strike against General Motors by U.S. auto workers, and earlier this week we heard talks had taken a turn for the worse. Joining us right now to talk about what's at stake for each side in the negotiations and how we might get a resolution is Bob Lutz. He's the president of Lutz Communications. He's also former vice chairman at General Motors and a CNBC contributor. And Harley Shaken, who is professor of labor relations at UC Berkeley. Bob, why don't we start with you? What's at stake for GM here?
Well, the stakes really are American competitiveness. And as you'll recall, after the Chapter 11 bankruptcy of General Motors, the government made sure that the wages were supposed to be equal to the transplants in the United States. Today, actually, they're on average, first of all, General Motors has the highest hourly pay of any manufacturer in the United States. Secondly, the average wage is $13 above that of the transplants, and that's with the contentious temporary employees factored in. If you take the temporary employees out of the equation, the wage differential is even greater. So General Motors pays well, cares for its people, has great health care, put an offer on the table which the union said at the time, if you had presented this a day earlier, we would have taken it to ratification. That offer has since then been improved, and they still won't take it to ratification. So, excuse me and others for believing that for some reason the union is dragging its feet on a perfectly good deal because of the distraction caused by all of the indictments for corruption and self-dealing within the union.
Harley, can you hear that?
Heard a thing, just one little bit of what Bob Lutz said, and then I'm hearing myself.
Oh, Harley, yeah, you're getting what's called the feedback loop played back into your ear. We just need to fix the mix minus on that. What I will tell you, I don't know if you can hear me at this point. Bob kind of laid out what GM has on the line, said that GM workers get paid more than any other automaker in the United States, and that they had what was a good deal that they said they would have signed a year earlier. He thinks they're dragging their feet on this. What do you think the union has at stake?
The union has a lot at stake, and I'm actually getting feedback.
Okay, take it out of your ear for just a second. You can put it back in when you're done talking. I'm sorry to ask you to fix this on the fly. It's a difficult thing to do, but if you take it out of your ear, and say what you have to say and then put it back in. Sorry about that.
It's the spirit of the negotiations, fixing it on the fly.
Trying to work together, right?
I would have to say that I would take
also
issue with
myself
a bit of the
when
way
I
Bob
talk,
laid out the cost structure. That is, GM's total compensation cost $63 versus, say, $50 for Toyota. That's true as far as it goes in the United States. But if you include Mexico and the United States, meaning if you combine those wage rates, so far this year, 92% of the vehicles GM made in Mexico, almost entirely SUVs and highly profitable pickups, were exported to the U.S. If you include their Mexican wage rates, which average $270 an hour, GM's total wage cost for Mexico and the United States, they're all these vehicles are being sold in the U.S. market, is $48 an hour.
Okay,
Toyota, which employs 1/5 of the workers in Mexico that GM does, their total wage cost is $47 an hour when you combine it like that. So the notion of GM being way out of line, if you look only at the U.S., but now production is highly integrated between both countries, and that's one of the issues that right now has derailed the talks in Detroit.
Hey, Bob, let's talk a little bit about what this means with NAFTA. The workers there are fighting to make sure that they don't lose more of the production to either Canada or Mexico. That is an issue that sticks out. And then maybe also talk a little bit about your experience with UC Berkeley and why you and Harley may have a difference of opinions here.
Well, first of all, I think GM will survive this because in the old days, they said an 11-week strike would bring GM to its knees because of the drying up of the cash flow. That is no longer the case. because China produces so much of the current cash flow and as long as China keeps operating, GM will stay alive. And to the good professor's remarks, of course Mexico produces a portion of the vehicles, but an uncompetitive and increasingly uncompetitive U.S. wage cost simply drives more production to Mexico. That's all I'm saying. As far as my UC Berkeley experience when I was in the business school there, I actually got out with an MBA with a 3.83 grade point average, which that time was sort of a record. But the one course I had a great deal of trouble in was taught by one of Professor Shakin's predecessors called Labor Relations, History of, Philosophy of, and so forth. And I had to write a term paper, and I touched on a number of aspects, but because I wanted some balance, I wrote in it that large unions had plenty to answer for when it came to the loss of competitiveness of American industry. I got a D on that paper, and it was heavily red circled, and in the margin it says you obviously haven't been paying attention in class and so forth. So it was not popular, but then I've never tried to be popular.
Bob, if you could send me the paper, I would try to raise the grade for you.
Professor Shakin, a last quick word just in terms of whether you think the union has the power and the support of its people to continue this for the inevitable future.
Oh, I think the union does have the power, and I think we're seeing this right now. Bob, of course, is right about the role of China, but there's something else in here. Moody's last week said it might lower the bond rating for GM to junk status. That would be a high cost to pay should the strike continue much longer. So GM is hurting in a critical market in the U.S. It remains very important. And what we are seeing right now is a test of economic wills. It goes beyond the auto industry. GM and the United Auto Workers in the 1950s pioneered the road to the middle class for the U.S. economy. It gave us a strong middle class, strong economic growth. I think we shouldn't forget that lesson. It's the competitiveness of the entire economy because of the union and the corporation working together versus being jammed as they are right now.
Harley, Bob, want to thank you both for your time today and for working with our technical difficulties. Good game of telephone. Join us again. We'll see you soon.
Okay.
Finally, in the wake of the WeWork IPO collapse, we're taking a look inside the most valuable venture-backed private companies. I want to get over to Dietrich Bosa right now, who's on the West Coast, with an up-and-coming player in the fintech space. Good morning.
Good morning, Andrew. That would be Stripe. It jumped into the top 5 of this list just a few weeks ago after raising money at a $35 billion valuation. That makes it more valuable, significantly more valuable than public fintech player Square. Now, with just 7 lines of code, sibling founders Patrick and John Collison, they upended the payments landscape and created the back-end infrastructure that is Square. It was code that companies like rising startups, Lyft, Instacart, DoorDash, that they could simply plug into their apps or websites and bypass a complicated network of banks, processors, and gateways. The company now processes hundreds of billions of dollars in online transactions annually, charging a small fee on each one. But guys, the company may not be looking to go public anytime soon. First, it just raised $250 million. Secondly, they may have some work to do on the corporate governance side. Its board of directors has just 6 members, 2 of which are its sibling founders, potentially giving them outsized influence. It only added its first woman to the board, Google Cloud's former CEO Diane Greene, earlier this year. The company now has more than 2,000 employees, but they couldn't tell me who its head of human resources is. We also don't yet know anything about its financials, unlike other names. I was talking about Airbnb yesterday, which has given us clues over the years. Back to you, Andrew.
Okay, thanks, Dietrich. Tomorrow we continue our look at the most valuable venture-backed private companies. Next up, this one, you ready for this? Jewel Labs, a company with big potential in some ways, but also facing some very big problems, and not just business ones, but ethical ones too.
Our futures have been under pressure this morning on fears about the U.S.-China trade fight. Among the latest developments, Bloomberg is reporting the White House is talking about possible restrictions on capital flows into China, specifically focusing on investments made by U.S. government pension funds. Join us now, Kamal Srikumar, President and Investment Strategist at Srikumar Global Strategies. And as you've been bullish on bonds over the years, and Sri, that you didn't know any of this stuff was going to happen. It was basically, I think, that you thought there were some structural issues globally in the economy, and that maybe some of the things we did here were Keynesian and wouldn't last. And you didn't know that we were going to have a trade war. You didn't know